Hi guys, hello and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Wednesday morning and looking pretty good when it comes to the cues that we are getting from the global markets. Wall Street clocked a fresh record high last night thanks to the US CPI data that came in cooler than expected, but there are chances of a Fed rate cut rather in the month of September, and the CME's Fed Watch tool is indicating a 94% chance of that happening, and that's something that buoyed sentiment on Wall Street, and we saw S&P and Nasdaq hitting fresh record highs. If you look at the Asian markets, Nikkei is extending its record run. Yesterday it hit a fresh record high. Today as well the index was up somewhere around 1% or so last time I checked, and all the other indices like Kospi and even Shanghai etc. are trading in the positive zone. GIFT Nifty was hinting at a very strong start for our markets as well. But remember, there have been instances when global market cues have been extremely strong, but we have not really walked in tandem with the global markets. So what we need to watch out for is whether or not we manage to sustain higher levels, because yesterday we clocked in that 24,700 mark, but gave up all of those gains and ended even below that 100-day moving average level of 24,514. So yes, for us, even if we see a pop at the start, we need to really see whether or not we end the day with gains or not, and it will be disappointing if we if we open with gains and we fail to sustain those gains. But yes, and also in focus would be the Nifty Bank Index, given the fact that it ended right at that 100-day moving average level, and Nifty Bank has also been struggling for direction. Yesterday it saw some gains, but then again gave up most of them, and even the PSU banking index came under pressure. That has been seeing good traction since SBI numbers, but even the PSU bank index came under selling pressure yesterday. So yes, we are looking at a good start, but most important would be the fact that we should look at a good close as well by the end of the day. But lots to watch out for. We have the new age companies that will be in focus, the likes of Nykaa, because it reported good set of numbers. Even Honasa reported good set of numbers. It has earned an upgrade from CLSA as well, and Paytm will be in focus as well on the back of it overcoming a regulatory hurdle as well. So we'll be focusing in on the new age companies. We'll also be focusing in on your stock related queries. Please keep them coming in. Try and send them in before 9:30, because that's when we take the queries, and we'll try and take as many as possible. But of course, before we move any further and get all our guests on board, let's quickly take a look at the top stories at this hour. Rate cut bets spark a rally on Wall Street overnight. Nasdaq and S&P 500 closed at record highs as investors cheered lower than expected inflation data. Dollar as well eased while treasury yields climbed. Asian markets edged higher, tracking the overnight rally on Wall Street. The Nikkei extends its record run, surging another 1%. The GIFT Nifty too indicates a higher start for the Indian market. Oil prices dip overnight as investors and traders await inventory report from the US Energy Information Administration, while gold prices surged near the $3,350 per ounce mark following the US CPI data. India's retail inflation in July eased to 1.55%, the lowest reading in 8 years, but this was slightly above economist expectations of 1.3%. And in key results, ONGC posts mixed set of earnings, with profit rising 18% on a year-on-year basis and revenue dropping nearly 3%. Meanwhile, Apollo Hospitals beat expectations as net profit surged over 40% in the quarter gone by. Also in focus will be Nykaa and Honasa. Both the companies reported good set of numbers in the quarter gone by. Quickly recapping yesterday's market action before we bring on board our technical guest for the day. Market really failed to hold on to opening gains. We ended at the day's low. In fact, at one point we were above that 24,700 mark. I think 24,702, that was the swing high yesterday. But we slipped, even below 24,500. In fact, we slipped below that 100-day moving average level of 24,514 as well. Financials were a pain point yesterday. Both the Nifty Bank and PSU Bank indices were under pressure. In fact, the Nifty Bank index also ended just about at that 100-day moving average level. It was down 1%. and the mid-cap index as well ended lower, but it was relatively outperforming the benchmarks. HDFC Bank, ICICI Bank, these were among the key drags on the index, but there were some result reactions which really capped the losses in the broader end of the markets. For instance, Alchem Labs reported good set of numbers. That stock was up 7%. HAL numbers were better than estimates, the operating figures, but the stock did end in the red, but it was off the day's low. And there were some earnings disappointments as well in the form of Astral that slid somewhere around 8% on the back of poor numbers. Muthoot Finance as well was under pressure, and so were the likes of RVNL. In terms of fund flows, foreign investors continue to remain net sellers. 3,400 crore rupees worth of equities sold in the cash markets, but DI buying support makes up for that as well. So 3,500 crore rupee worth of buying coming in from domestic investors in the cash market. Put call ratio fell to 0.78 vis-a-vis 1.03 in the previous session. So that's kind of a good sign. In fact, if you look at the F&O ban list, there's been a new entrant, Titagarh Rail, in the futures and options ban today. But a couple of counters that remain in the F&O ban would be the likes of PG Electroplast, PNB Housing Finance and RBL Bank. So all in all, that was the texture of the market yesterday, failed to hold on to the gains that we saw intraday. Today the setup looking good, but whether or not we manage to hold on to these gains will be key to watch. So on that note, to understand the setup, let me bring on board Sudeep Shah, Head of Technical and Derivative Research at SBI Securities. Hi Sudeep, lovely having you on the show. Good morning. Looks like we are poised for a good start, but what are the chances that we are going to defend those levels? Because 24,700 was seen on the charts yesterday, but we failed to really hang on to those levels.
Good morning, Nandita. I was just listening to your opening piece that good starts need to end similarly and not like in the last few days that we are witnessing. So fingers crossed, good start. Let us see that whether the markets end also in the same trajectory or even higher. Overall, see, there are a couple of things that are not working for the markets. Is that the overhang of the Trump statements, what is expected on a daily basis, something or the other, a lot of moving piece of news that are coming on a daily basis, which is keeping markets jittery and extremely nervous. So overall, if you see, even within the Nifty, yesterday Nifty IT, Nifty Bank did not support that much beyond a point. So for me, these two indices would be extremely crucial for Nifty to move higher from here on. Overall, 24,650, 24,700 zone on spot Nifty now holds key for any premise of a stable reversal. So this 24,700 zone needs to cross on a closing basis. Even in case we close above this once, there would be a fair chance of a dash towards 25,000, 25,100, which itself could be a result of short covering, because if you see the long short ratio, FII's long short ratio, which is closer to 8 right now or slightly tad below that. That is historically, if we see, we've not seen too many times where the long short ratio has slipped below 10 or 8 in this case. So wherever this has happened, slightest of positive news, markets have rebounded at least 3 to 4% from those levels. So what I feel is might be this is that last phase of capitulation where the markets are anything and everything. Wherever the results are not good, those stocks are being hammered, or even good results, they are not seeing that kind of positive traction. So it is that negative phase. But what I feel is that one good news around the corner, whenever it comes, the entire scenario could change, because beyond this point, excessive shorting, I feel may not be the case, and we just need to pick up good stocks, good spaces we need to identify and keep adding them from a positional perspective, and not just trying to dabble it from an intraday perspective.
Got your point, and what you said, sounds like music to the ears. 25,000, 25,100. We are all waiting for those levels to come back on the charts. And of course, you also pointed out that the scope for excessive short addition is looking limited from here. Of course, because of the FI long short ratio as well that you mentioned. But in terms of the Nifty Bank Index, that's also been under pressure. It has been underperforming as well. So here on the Nifty Bank, what is the level that you're working with in terms of support? And do you see any kind of direction taking shape here on? Because yesterday as well, it did see some recovery, but then it succumbed to selling pressure once again.
See, Nandita, if you just take out the last few days out of the equation for Nifty Bank, by and large, Nifty Bank has been outperforming Nifty by a mile because Nifty IT has not been performing. So it is the Nifty Bank which has done a lot of hard work in the last several months, except the last 4 or 5 sessions. So, and now with the news of ICICI Bank savings account being hiked, the minimum balance there. Being hiked, and even a few other selling pressure in the private banking space. So what I feel is that we might see some kind of a resistance here, but those all most of these news are now digested, they are factored in. And overall, what I feel is 55 700 on Bank Nifty spot will now remain the key, because Nifty has been on a falling trajectory since last several days. Bank Nifty has traded in a range, although it has not broken down below that key support of 54 800, 54 900. So it might have retested, but it has not broken that on a closing basis. So what I feel is overall 55 700 now remains a key for any short covering move, for us to at least ascertain that yes, now some kind of a bottom has been formed and we could see a decent short covering rally from here. So 55 700 will be that level for me. And I'll at the cost of reiterating, I will again say that along with Bank Nifty, it is imperative that Nifty IT also has to make a move on, if not 7-8% kind of rally, at least 2 to 3% rally also. If Nifty IT index shows, that would create some kind of a floor and a support for Nifty at current levels.
Okay, point taken. The Nifty IT also has to fire up aside of the Nifty Bank Index to provide a fresh leg up to the Nifty. But just about seconds to go for the market to open, 15 odd seconds. I was pointing out that Paytm is one counter that will be in focus aside of Honasa and Nykaa. Those will be in focus because of numbers, but Paytm has won a major regulatory battle because the RBI has granted its unit Paytm Payment Services in principle authorization to operate as an online payment aggregator. Now we'll see how that is reacting, but let's take stock of the market, the headline indices first. It's a good 90-point uptick on the index as was being expected. Going by the GIFT Nifty signals, it's almost a 0.4% kind of a gain on the headline indices at the juncture. The Sensex is up somewhere around 300 points, 80,500 on the Sensex. The mid cap index outperforming at the current juncture, 0.6% kind of a gain coming in there. Advanced decline ratio, early days to comment, but almost 3.5:1. That's the advanced decline ratio on the NSE. 1250 stocks advancing to 350 declining. Let's hope the texture of the market remains similar as we progress through the day. But in terms of sectors, the Nifty Bank Index has started with a good 180-point gain, 55,200 on the Nifty Bank Index. But let's take stock of what the other sectors are doing as well. Yesterday, we had autos extending gains, even IT and metals, pharma, etc. were in the green. Today, we are seeing once again autos, firing up, 0.6% kind of gain coming in on the auto index. All the sectors are trading with gains at the current juncture. Aside of autos, you can see good, good traction in the pharma space, in the metal space as well. Dollar index has cooled off significantly, I think 0.5% or so since the US CPI data came out last night, I think, which is why the metal pack is up almost 1%. Among the top sectoral gainers, you also have the oil and gas index up 0.5%, pharma 0.2% higher, the Nifty PSU Bank index once again up 0.5%. Yesterday it had taken a breather. All the other sectors as well, even realty that was under pressure yesterday is up somewhere around 0.5%. I want to see what FMCG is doing. That's also up almost 0.3% or thereabouts. So yes, the texture of the market looking good at the current juncture. Let's hope we end the day, in a similar fashion as well. In terms of individual movers, then Apollo Hospital, good set of numbers. It's reacting to that, almost 5% higher on this stock. Top Nifty gainer. I think it's been a 40% uptick in the net profit on a year-on-year basis. Bharat Electronics up 1.5%. Tata Motors, Power Grid, ONGC also reported mixed set of numbers. Nonetheless, it's among the top 5 gainers on the index. Adani Enterprises, Grasim, all the other metal names like Hindalco, Tata Steel in favor. So are some of the two-wheeler names like Hero Motocorp, and even pharma names like Dr. Reddy's, etc. are extending gains. Eternal is also in the green as we speak. In terms of laggards, there are just about 3 nifty losers this morning. So yes, things looking good. Tech Mahindra, that's among the top laggards, down 0.3%. Axis Bank is the top nifty laggard. Maruti and Wipro are the other laggards. But looking at the open, Sudeep, anything that's catching your fancy that you will take a bet on in terms of recommendations? Let's get that out of the way. What would you be recommending to our viewers given the good opening that we've had this morning?
Not Nandita, not just on the basis of the good opening, but there are a few stocks that are doing well, and I wish to discuss them. So, case in point, it is L&T which has come out, which had come out with its numbers last week, and the stock did really well. Then it retested its support zone, and right now it is once again touch and go with 3,700. So overall, what I feel is that even from the current levels, L&T looks good. It could head up to 3,850, 3,900 levels on the upside in the next couple of months. On the downside, keep a stop loss at 3,600 thereabouts. And next couple of stocks that are doing well, one is from a cement stock, which is Ultratech Cement. Here we feel that the stock has broken out about 12,200, 12,300 in the last few sessions. It's sustaining above those levels, and even within the cement pack, this is outperforming. From a technical standpoint, it is trading above all its moving averages, as well as if you see, there's a lot of at the money put writing which is witnessed. So what I feel is that this stock could do well and could head up to 13,300 levels in the next couple of months. Keep a stop loss of 12,000 on the downside. There's one stock which has moved in the last few sessions from key levels. And even within the exchanges space as well as the capital market intermediary space, this is one stock which is outperforming, and that is MCX posted its numbers. So here also we feel that the stock could head higher. It's no fresh buying call here, but those who are holding can continue to keep holding it for 8550, 8600. And if you bought at lower levels, then keep a trading stop loss at 8170.
All right, recommendations L&T, Ultratech and MCX. MCX, no fresh buying, but if you hold positions, hold them with the levels that Sudeep has just mentioned. But Sudeep, let's talk about Paytm. In fact, the entire new age basket is looking extremely buoyant. Paytm, of course, has got the RBI in principle authorization to operate as an online payment aggregator. This has been an overhang on the stock, but of course the stock has been doing well in the last 1 year. You saw what it's done in the last 1 month as well. And Citi this morning came out with a report where it has a buy call. Target price is at 12.15. The stock is now at 11.70 or thereabouts. Now, I just want to say what Citi has pointed out. It says that the license win lifts a major regulatory hurdle that the company was facing. It has boosted sentiment and it will continue to do so going forward. With the ban lifted, the company can now leverage its scale and product capabilities to compete more effectively. Even Bernstein has an outperform call, but the target price is a little lower here at 1100 rupees. It says that the immediate impact on the metrics will be limited, but it's a major relief for the company nevertheless, and it should boost the payment margin by allowing onboarding of smaller merchants as well. Given the fact that Paytm shares have been doing extremely well, last month, I think over the last month, it has gained somewhere around 18% or thereabouts. Is it a good idea to chase momentum here?
See, if you're a trader, then yes, these stocks are your favorite from a momentum perspective. But looking at Paytm, the way it has broken out, I feel it has broken out too fast in the last several sessions. So overall now 1120, 1130 needs to be watched out for as a trailing stop loss. And if those are bought at lower levels, can trail it with 1130 as a stop loss, and the next levels that this stock could stretch up to would be around 1200, 1230 on the upside. And 1230 is that zone where I feel one should get a bit cautious, because given the nature of the stock, this much move, I feel the stock could hit resistance, and it might be the markets outperform, and this stock may not move too fast or in sync, because it has already moved and a lot of good news are already factored in the price.
Good news. A lot of it is already factored in the price for a PTM. But let's talk about Hunasa. It could very well be a stock of the day because the stock is up somewhere around 8.5%. Reported a good set of numbers. Profits, I think, grew somewhere around 3%. Revenues are up somewhere around 7.5%. Although margins came in a little lower at 7.7% vis-a-vis 8.3%. But CLSA has upgraded the stock to outperform with the target price of 333. In fact, it said that growth was impacted by sunscreen due to the early onset of monsoon. But nevertheless, according to CLSA, EBITDA margins managed to beat their expectations. Of course, they have raised their FY26 to FY28 earnings estimate by 15 to 26%. The stock has, I think, recovered in excess of 40%. From February lows. It has been doing well on a YTD basis. If you look at the stock, it has given a good 17% return. Immediate levels, if one has to play for, what would you watch out for? And over the medium term, would you expect levels of 350, 330 as pointed out by CLSA?
Nandita, I feel I generally don't like to start trade in a stock. This is my personal belief that when a stock has fallen more than half or more than 70% from it, 60-70% from it highs, although the results right now are still it might have come better, but there's a structural damage to the stock's chart. So until and unless it does not cross 325, 330 or thereabouts, and it sustains above that for a bit of a say a decent period of time, I would not go long here, because there are a lot of other stocks that are available within the space and even outside the space for us to make money. And even in these kind of markets, there are a lot of stocks that are still giving us some kind of an opportunity. But with this kind of chart structure, there's a bit of always ifs and buts, that it might be just a dead cat bounce, and once again this overall longer term chart trend of the chart is on the downside. So a short term bump up should not be, I guess, one should not get trapped here.
And what do you make of Nykaa? Numbers were good. The stock is up somewhere around 3%. Even brokerages are fairly positive. But the stock has given negative returns over the last month or so. Do you think it's expected to remain sideways, or do you think today's move is hinting at more upside, because it is still closer to its 52-week highs?
See, now if you compare both the stocks that we have discussed, Onasa and Nykaa, if you have to choose, say, out of both of them, then Nykaa would still be a preferred choice, because here there has not been any major structural damage in the chart. It might have moved slowly. Immediately after the listing, there was some kind of a profit booking, but nothing beyond that. And steadily in the last several months, we have seen the stock growing from strength to strength. So overall, if there has to be a preference between both the names, then yes, Nykaa would stand out. And what I feel is that if from the current levels, uh, 200, 203 zone now will act as an important support. Until this holds, this could continue, the up move could continue closer to 225, 227 on the upside.
Okay, that's the view on some of these new age companies, a lot of them in focus. But let's shift focus to some of the viewer queries that are trickling in as well. I would like to take the first one from Rupak Mehta, because it's on two of the stocks that have been making headlines for all the wrong reasons, the likes of PG Electroplast and Praj Industries. PG Electroplast, we've seen it's shaving off quite a chunk in the last 4 days. Numbers haven't been good. The stock has fallen quite a lot, given the fact that the company has slashed its guidance as well. Rupak Mehta wants to know whether one should accumulate more, sell and cut losses, or wait it out. That's for PG Electroplast and Praj as well. Praj also reported weak set of numbers, and the stock was down quite a bit. How should he navigate these two stocks?
Nandita, I feel PGL, now see the stock was doing good until about say a couple of weeks back. Then the slashing of guidance as well as the numbers coming way below expectations, and the growth. See, generally these kind of stocks are always when they're high PE, the basic fuel in their move is growth and the expectation of growth. And when you see that faltering, then it's not going to be a good news kind of scenario for the stock. And with the promoter also selling a fair bit of stake, that has acted as a big dampener. So given all these factors, which has suddenly changed in the stock, so I feel overall now the trajectory for the stock would be negative. Although given the kind of sharp cut that has been witnessed in the last 4 or 5 sessions overall from 750 the day after the results, there was a biggest fall in the history of the stock. So post that zone, I guess with the kind of fall up to 450, 470 level, there is some kind of a pullback that is currently underway. So this could be up to 530, 535 level. And in these dead cat bounces, it could be anywhere between 3 to 7%. So, but post that,
Hmm.
post that, I feel the structure is damaged. So do not expect levels of 7 800 again in a short term perspective. So if you have an opportunity elsewhere to reduce this and add some other stock, I guess that could be a good option.
Hmm.
Coming to Praj, what I feel is even here also the structure has been kind of a bit more on the selling side. So my sense is that avoid bottom fishing here. And Praj also say a lot of damage has already been done, but the speed at which the stock could possibly reverse, I guess it could be a bit slow. And the entire pack is
Hmm.
right now under pressure. So it's not that one stock out of the theme is under pressure, but entire pack. So overall, I feel 435, 440 levels on the upside are very crucial for the stock to cross. Once this is done, then there could be some kind of a floor formation here in the stock. Then the supports
Right.
itself, yes, could act as a support on the downside.
Right. Sure. I hope that answers your query, Rupak. We'll try and take one query per viewer so that we get as many addressed as possible. The next talk that I want your thoughts on is an Astral coming in from NP Gandhi. Now, this stock got badgered yesterday on the back of poor numbers. The stock has also been in a downtrend. Would you, advise traders and investors to avoid bottom fishing here as well?
Absolutely, Nandita. I guess all the stocks, wherever the results, there are two things. One, the medium term trend has to be positive, or the medium to long term, both trends have to be positive for you to then use the dip in the short term to add that stock. But here in this case, the medium term, the long term, both the trends are negative. It was a short term bounce that had happened, and post that now the results have come which are below expectations, which were below expectations, and we've seen that sharp cut yesterday. So overall, I feel
Hmm.
1350, 1370 now remains a important resistance. Until and unless that is not crossed, please do not do bottom fishing. Just wait and watch. You'll a lot of other opportunities as I am mentioning that why do we need to just dabble of stocks at lower levels which are in a massive downtrend or at least a stronger
Hmm.
downtrend. So I guess this better be avoided. On the downside till 1350, 1370 is not crossed, I guess levels of 1200, 1180 also could be revisited.
Hmm. Okay, that's the view. Avoid bottom fishing here. Astral, I hope that answers your query. Quickly moving on to the next query then. Query on Suzlon from Nitin Shahji. The stock is down 3 odd percent. Numbers came out, but the CFO has also resigned here. The stock is around that 60 level. How would you approach Suzlon now? Sudeep, is my voice reaching you? All right, I think some audio issue with something with his feed. We are trying to get him back, but let's focus in on the markets. Then we will try and get more queries addressed when once he's back. But the Nifty just about 75 points up. It's cooled off slightly from the opening highs, but nevertheless 24,560 is where we are at. The Sensex is also up some around 180 points or thereabouts. The mid cap index outperforming the benchmark, 7/10 of a percent kind of a gain coming in on the mid cap index as we speak. The breadth is also fairly strong, continues to remain strong. 2:1, that's the NSE advanced decline ratio. In terms of losers now, we can see more red on the screen. The list of losers has gotten a bit longer than what we had at the open. So, IndusInd Bank, that's the top Nifty laggard. I think there was some bit of news on IndusInd Bank. The Mumbai Economic Offences Wing has told CNBC TV 18 that they have launched a preliminary inquiry based on complaint received from current management of the bank, and they've recorded statements of staff members of former CFO and deputy CFO of the bank, and they will be summoning Sumant Katpalia and Arun Khurana in due course to record their version as well. So IndusInd Bank, that's the top Nifty laggard at the current juncture. Aside of that, you have Maruti, and some of the tech names like Wipro, Tech Mahindra that are under pressure. Even Axis Bank from the banking pack. ICICI Bank continues to remain under pressure. Eicher Motors, Bajaj Auto, some of these two-wheeler names, Hero MotoCorp, these are some of the, not Hero MotoCorp, I beg your pardon, Maruti, Eicher, Bajaj. These are some of the laggards from the auto pack. Nestle India is under pressure. But on the flip side, what's doing well is Apollo Hospital. Now, I think at the high point of the day, up over 5%. Hindalco, Bharat Electronics, Tata Motors, Hero MotoCorp is among the gainers today, up over 1%. Eternal is also doing well. Geo Financial, Grasim, Tata Steel, JSW Steel, some of the metal names also doing well, given the fact that the dollar index cooled off after the release of the US CPI data that was a tad below what the street was anticipating. Nevertheless, September rate cut bets have gathered pace. In fact, the CME Fed watch tool is hinting at a 94% chance of a rate cut in the month of September. In fact, even the US Treasury Secretary Scott Bessent is batting for a 50 basis point rate cut from the Fed. Whether that happens or not, only time will tell, but a stage is looking set for a September rate cut by the Fed as of now, which is something that provided a leg up to the US markets. We, of course,
कुछ नेट इश्यू आ गया था,
close there.
sorry.
And that's why, but I think now we have Sudeep back with us. Sudeep, if you can hear me, we were talking about Suzlon. Under pressure today, what should one do?
Yep. First of all, apologies. There was some connectivity issue, but yes, happy to be back with you, Nandita, again. Nandita, see what I feel is Suzlon here. If you see the charts closely, there are a lot of gaps. There were a lot of resistances for this stock. So while the news of entering into the FNO space was was a good news, but now I feel 65, 66 levels are very important for the stock to cross. Until and unless this is not crossed on the downside, 56, 54 levels also could be retested, revisited. So that may be the right area. If someone is looking to go long, then one should reassess the situation when the stock comes closer to 55.
Okay, that's the view. Then on Suzlon, let's move on to some other queries. Then I could spot a query from Anunay. He wants to know your thoughts on Kaplan Point. He wants to know whether it should be held at current levels or not. Any thoughts on Kaplan Point and what one should be doing with this stock?
See, the stock from a medium to long term point is quite good. Now, the fundamentally the stock is doing all right things. The results are in tandem. They are better than expected in a last few quarters. Now, technically, also the stock was in a strong uptrend, but in the last few months, even at higher levels, the stock is consolidating without any sign of a deeper crack or a breakdown. So, what I feel is that from the current levels, say 1950 can be that trailing stop loss that he can maintain until 1950 holds. I feel that the stock is doing good and it could continue its up move up to 2300, 2350 on the upside, or even maybe higher if the market conditions improve, then this expectation could even increase on the upside. But at least given the current market scenario, keep on 1950 zone as a trailing stop loss for this position.
Okay, take note of the trailing stop loss that Sudeep has mentioned. Hope that answers your query. Let's move on to the next query then. I spotted a query on CG Consumer, Crompton, from Madan Sarwal. Wants to know your thoughts on where the charts are headed in the coming days. The stock has been sideways, but nevertheless close to 52-week lows. Where is it headed? What are the kind of levels you are envisaging here?
The results here, you're talking about CGCL or Crompton?
CGC, we're talking about Crompton Greaves Consumer Electricals, 320, that's
Okay,
where the stock is
so
at.
yeah, 320. Yeah, okay. So see here, the stock is in a continuous downtrend. Even monthly charts are disturbed. So I feel 340, 345 zone will be very important for this stock to cross. And I'm not just talking about a trading perspective here, even from a medium term bottom fishing or an investment perspective also. I guess here the stock could see some kind of lower lows also in the coming few weeks from a weekly perspective. So the real good support for the stock is somewhere around 280, 290 zone. So until and unless this 335, 340 zone is not crossed, lower zone of 300 to 290 thereabouts could be quite on the card. So my view would be to avoid any kind of bottom fishing or any leverage buy at current levels.
All right, that's about Crompton. Hope that answers your query. The next one, there are a couple of queries on capital market plays. I want to bunch them up together and take them. Varsha Gajar wants to know your thoughts on a CDSL, and Nanda Reddy wants your thoughts on whether one should look at entering BSC right now or not. What would you advise?
See, both the stocks, the answer would be quite common because both are capital market plays and they are directly linked to the market sentiments as well as in case of BSE, the one extra point would be what would happen in case of say anything comes, any regulation comes regarding derivatives or FNO curbing or something like that. But if you have heard the SEBI chairperson in the last few days, he has categorically mentioned that they are now not looking out to curb the derivative space any further, which were some news items in the last few sessions. So for me, now that play would be out of question. Secondly, a lot of these stocks have already corrected 25, 30, 20, 25% from higher levels, making them a compelling buy at the current levels. They're at least from a portfolio standpoint, you could buy and hold them. Don't expect any immediate returns here or fireworks here like you saw in case of NSDL post its listing. But yes, this entire space, we are very constructive, very bullish on this space. But we also feel that this is a story which could pan over the space of next 18 to 24 months, and we might not see that faster up move like we have seen in the last couple of years. So it could be a 12 to 15 year 12 to 15% CAGR story, but they are all good portfolio stocks, whether it is CDSL, whether it is CAMS, whether it is BSC, and the leader of the pack in terms of momentum right now, which is MCX, which we just discussed at the start of the show.
Yeah. All right, that's about the capital market plays. Then last two queries for the day. Anandrup Bandobadhyay wants to know your thoughts on Tejas Networks, whether it's a good buy at current levels. The stock has seen a sizable correction. Year to date, YTD basis, it has shaved off half of its value. The stock is at 544. In fact, very close to its 52-week lows of 543 and a half. Is it an opportunity or is it an avoid?
Nandita, at some liberty of this reply, I feel it's an opportunity to avoid. I guess please avoid
Okay.
my. I would really request all our listeners to not get trapped in these kind of stocks. And we've been throughout the show, we have been mentioning that trend is the biggest differentiator here in terms of us making money in stocks or we don't make money in stocks. So if you see the trend of the stock, this is almost one third of what the stock was in say December 2024. And what has changed? Just a couple of results. And if a couple of results can
Yeah.
bring the stock to one third of its price, then I guess it's not worth from an investment standpoint. Trading standpoint, you can make a couple of percentage, 3, 4, 5% here and there with some kind of a adequate stop loss. But if someone is wanting to enter their funds a medium term or long term from a view of making some serious money, then I guess you should look at high pedigree companies where the structure has been very good, and even in case of bad results, they have not been battered like the stocks that we are all discussing about in the last 20 30 minutes. So my sense is that please avoid any bottom fishing in this counter. Lower lows could be witnessed, and this could continue dipping from here on technically.
All right, that's the view. I hope that answers your query. But I'm afraid we have just about time for one more query. And since there are two queries on this stock, I would like to bunch it up on SBI. Prajit Prakash, and there was another gentleman who had sent a query on SBI, Gurpreet Singh. Now, Gurpreet has 120 shares at the rate of 796. He's making some profit. And Prajit has bought at
No,
811. So, some
no.
profit here as well. What should they do with SBI?
Nandita, I am afraid I won't be able to reply to this question
Oh
from a
yes,
compliance
yes, of course.
perspective.
My bad. No worries.
Hey,
My
no
bad.
worries,
Actually, I should have thought about it. But
no worries. We can discuss on the PSU Bank Index itself. I guess if
sure,
you
sure.
rather than SBI, I guess it would be a better measure. I guess, and I even missed discussing that at the start of the show when we were discussing a lot of other sectors also. So yes, from a sectoral standpoint, we feel that PSU Bank Index looks at least it's showing some kind of bottoming out. A lot of stocks like say Bank of Baroda, Canara Bank, PNB, they are at their important supports. So here, in case someone wants to invest into PSU banks, so I guess a few of the names that I shared, they are also good enough. And if you don't want to take a concrete view on any particular stock, then PSU Bank Bs are also available from a medium term investment standpoint. So I guess that would be a better measure. And apart from PSU Bank Index, I guess
Sure.
one sector which also deserves a mention for all our listeners to have a view on would be the auto space, because that space has been outperforming in the last several weeks, and I feel we should not be missing that space.
Sure, got your point. And viewers, of course, Sudeep cannot comment on SBI because he's from SBI Securities. So send in your queries tomorrow as well. We'll get it addressed by another expert. And for all those whose queries we couldn't take, keep them handy for tomorrow. We will try and get them addressed tomorrow. But with that, Sudeep, thanks a lot for taking out time and joining in. And sorry for throwing that googly at you. But
No,
yes, we'll be
no,
mindful. But great to have your views,
no
and I
worries.
look forward to our next
Nandita,
conversation as well.
Nandita, you can keep throwing googlies. At least I become more alert with that. No, anyways, thank
No
you
worries.
so
We'll
much.
all of us always enjoy one or two googlies sometime or the other.
No worries. Chalo, thank
Thank you. Thanks a lot. But with that, quickly take a look at the market then before we bring on board our next guest for the day. 84% higher, 84 point higher rather on the Nifty, 24,570. That's where we are at. Even the broad end of the markets in fine fettle at the juncture, 2:1. That's the advanced decline ratio. So we are looking in fine fettle. Apollo Hospital, that's one stock that's in focus, 6% higher. For Apollo Hospital on the back of good numbers. But on that note, let's bring on board our next guest for today. Joining me is Radha Raman Agarwal, MD and CEO at Swyom Advisors. Joining us for the first time on the show. Lovely to have you, Radha.
Yeah.
First interaction with you. I want to first understand your thoughts on the market because a lot has transpired globally. There's a lot of noise in terms of, where the final tariff figure will settle at. Of course, there's still some time left to that because, US regulators and US lawmakers rather have indicated that we are yet to arrive at a deal with India. So, and of course, we have had the rate cut cycle also here in India. We've had an RBI policy, 100 basis point rate cut from the RBI as well in the last 1 year. So, where do you see things, heading here on? Would you be tempering down your return expectations for the year? How are you really looking at the market at the current juncture?
Thanks, Nandita, for having me on the show. I think it's good to interact with you and the audience here. So, first of all, let me tell you this Trump tariffs, what is coming in, is primarily in terms of the pressure tactics from Trump. So primarily, if you look at this is a geopolitical situation with India, China, and Russia being around. So it's more in terms of it will eventually settle down. The whole current 50% tariff may not last for long, and it's not sustainable either for India or for US. So effectively, what will happen is in long run it will come down, and whenever the deal happens, in fact, Trump is meeting Putin very shortly, so it might happen. But eventually, our sense as a group is very clear that it should get settled down very quickly, and the market should get poised back. Second, in terms of what's happening in terms of this, I would say, consolidation phase in the market, what is also happening is it gives an opportunity for investors to invest in quality stocks. I think current volatility for the last 15 days or 20 days around has given a good opportunity. In fact, today the market is also bouncing back, and we expect the tariff to get settled down very quickly. And once it settles down, the market will also come back. Our expectation of the market is the second half is going to be very good with this rate cut in the backdrop, both in US and in India coming in. I think the markets are poised to have a very good second half. And good investors, long-term investors should start kicking in, moving in terms of what which they should look at right now, and maybe start garnering good quality stocks in the market over a period of time.
Sure. Rate cutting cycle, of course, in the US is also expected to resume in September. That's the indication that we're getting from all the data that's come in. The CPI also came in last night, and 94% chances of a Fed rate cut. But what did you make of the RBI governor's indications? Are we in for a prolonged pause, or do you think the RBI will act once the Fed cuts rates?
Say RBI has got a very good inflation base now. The inflation is at a lower levels, what is possible. I think they're just waiting for the cues for Fed to cut in, and then they'll start cutting. I think currently we have a lot of room for the RBI to set in and cut the rates. And that will be very positive for the sector, and that will spur the growth. So we are expecting the RBI to cut rates soon. They will not delay too much. I think they'll just follow Fed to that extent here.
So another 25 basis point from the RBI? Not more than that?
I think 25 to 50 basis points. I'll be a bit aggressive because they would like to spur growth here. And given the opportunity, I think the inflation being so down, it will give an opportunity for them to have a higher base cut in terms of what is possible. That will also help the economy in local in terms of that will also help in terms of overall infra spend, what is possible for the country. So I think they will contribute and they will be aggressive in terms of cutting rates going forward.
Okay, I expect some aggression from the RBI in rate cuts going forward. But let's talk about the strategy now. I think I'm just going through your recent changes in allocations. You've trimmed allocations to small and micro caps and increased exposure to large caps, even mid caps, but marginally so. So in these volatile times, would you advise, a look at the safety of large caps, even though the July Amphi data showed a tilt towards mid and small cap funds?
So I'll tell you broadly, I think we should do a healthy mix for all three. So given the opportunities in the sector, we would like to be more sector specific here rather than mid cap or small cap. And I think there is enough opportunity in large caps also. Say, for example, you have seen Apollo Hospital results, how it has come in as a large cap, and effectively the results have been extremely good. So I would say we have to do the right mix in terms of mid cap and small cap as well as large cap. The other important thing what is also going to happen is the value a mid cap, small cap can create. The July data reflects that. So today the investor is looking for growth, and that growth will largely come into mid cap and small cap. And obviously to balance the portfolio, we need to have large caps into that. And within the selective range, if you pick up the right sectors and the right stocks, I think the investor is all set to make money on that.
Okay, so sectors, right? And that should be the focus. I was, I was just going through the changes that you made in June. You've increased exposure to IT and FMCG while trimming financial services and capital goods. That was in June. But what prompted that? Would you say that there are margin worries for banks, which is why you cut exposure there? And looking at the numbers from both large and mid-cap IT, would you change your allocations again? I mean, how are you looking at these two pockets post-numbers?
I'll tell you broadly, if you look at financial services, let me put it into two sectors. One is about the large banks and large NBFCs. And there's enough opportunities in terms of looking at affordable housing. I think they are growing at 20%. So that's an area I think we should be completely looking at. Second area, primarily IT. I think IT is bottoming out now. I think the earlier investor also mentioned that in terms of how things are moved. So the whole idea is that IT is forming a base. I think worse is behind them. And going forward, I think IT will do a good bounce back in terms of what is happening. Especially the large caps on ITs should do well from going forward. The reason is very simple. I think they have gone ahead and then corrected their basis. Currently, if you look at from a valuation, they offer a good dividend yield. There's huge cash sitting on the balance sheets, and they even look at acquisitions going forward. So I think IT has done their base, and going forward, IT should deliver good returns for investors.
Okay, so would you expect better numbers in the second half of the current financial, or would you expect
Yes,
Q2 as
yes.
well to be a little better than what they have handed out in
So I
Q1?
think the second half should be better in terms of moving forward. I think overall, if you look at IT, the worst for them is behind. So effectively, in terms of whatever has to happen, in terms of worst has happened for them, and the numbers should start ticking in from the second half of the year.
All right, expect pick up in IT earnings from the second half of the year. I think chemicals, metals, and mining energy, these are also some pockets that your fund recently tapped into. What's the rationale, and are these more long-term plays, or are you looking at these from a tactical point of view?
So this will be more tactical. I'll say long-term play. Currently, we are very bullish on the hospital sector. One of the sectors I think we are very bullish. Primarily, it's a capex-led sector. There is a lot of additions happening on beds. There's a lot of additions happening in terms of the overall, I would say, customer base. The penetration in India for Mediclaim is going up. So effectively, slowly, the whole cycle towards in terms of getting hospitalized and getting the medical treatment, both from people from India and abroad, is picking up. If you look at across most of the large hospitals, they have created a lot of value. If you look at even Apollo Hospital results and all which has come in, they have shown signs in terms of the whole spend is going up. Second, the penetration is also going up. So most of the large hospitals have announced capex, and it will be more of a capex-led growth. And with the penetration of this whole Mediclaim happening, this will make a large difference. So we are very bullish on the hospital sector as a whole in terms of the key areas. If you look at from a strategic point of view or for a long-term wealth creation point of view, we are very bullish on the hospital sector.
Okay, and which are the other pockets that you would look at when you talk about alpha generation? Would they be more tilted towards domestic facing themes?
Yes, so effectively look at our fund primarily focuses on domestic themes itself. So we are less immune in terms of the Trump tariffs which are there from a fund perspective. So currently, if I look at sectors, we are talking about consumer durables, consumer discretionary, travel, tourism. We are talking about financial services, both in terms of people who manage money as well as in terms of borrowings. So effectively, I mentioned that one of the key areas what you're looking at is affordable housing finance companies. So there we see growths happening, which are secured assets. So effectively, that's a piece. In fact, most of them have shown more than 20% growth. So effectively, what we see is that we have to pick our right pockets, which are more, I would say, domestic facing. That will help us to create alpha as a big opportunity.
Sure, got your point. There's been a lot of, fundraise paper supply in the market. What do you feel? Do you think that would cap upside in the market? A lot of promoters also offloading stakes, etc. What are your thoughts on that?
So Nandita, that will, I think, will be a continual process. Right now, if you look at, there are a lot of IPOs coming in. In fact, we are expecting few large IPOs also to set in a very short time. But I would say is a part of the process. Liquidity will follow in terms of, and we have enough liquidity to take care of that. So I don't think so that will create any difference. If you look at that, in fact, makes availability for investors in terms of different stocks as well as liquidity for them. So if you look at even the NSDL IPO which has come in, it created a lot of value for investors. So the whole idea is very clear in terms of what is happening. So the whole piece is that this liquidity thing takes care in terms of what comes in. And I think there's enough appetite from investors to take that. So I don't see any issues with the IPOs or the fund coming in from the promoters. In fact, it's a positive for the markets because the market's depth is pretty good and they'll be able to absorb it.
So, have you invested in any of the recent IPOs? Are you looking to invest in any of the upcoming ones? Because, you have a fair bit of exposure to unlisted companies as well.
Yeah. So I'll tell you, we have invested with a proper disclaimer in that we have clearly put in money in the solar side on Vikram Solar. And I think they are coming with the IPO very shortly. So we'll be positive to that extent. And with a disclaimer here that our fund holds positions in Vikram. And we are very bullish. We picked it last year and we are very positive on the growth story on the solar side. And I think we should be looking at that IPO very positively. And whatever I could gather, the IPO is also attractively priced and is enough on the table for investors.
All right. And
That's
lastly,
awesome.
any advice for investors who are looking to enter the market now, new investors and looking to build a
So I'll tell
portfolio?
you,
Any advice
the
that
way I look
you
at,
would like to share with them?
yeah. So I'll tell you, one should look at the volatilities are the best place where we can get into stocks. And the best part is the right now, if you look at last 15, 20 days, we had enough volatilities and there were some corrections. So it's the best time to pick up good quality stocks. So that's very important. And one of the key areas what they should be looking at is in terms of how do we see value. So asking about particular sectors, I've told about hospitals. We are very bullish on consumer discretionary. We are very bullish on consumer durables. We are very bullish in terms of affordable housing. I think when 2, 3 picks in affordable housing can be picked at, they will continue growing at 20 to 30% kind of a thing over a period of time. Hospitals, I've referred one of the things, and in fact, large hospitals will make a lot of difference. So that's a piece I would like to advise people to look at.
All right, that's the view then from Radha. With that, Radha, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Thank you and have a great week ahead. I
Thank you,
look forward to
Nandita.
another conversation with you sometime in the future as well. Thank you.
Thank you so much. Yeah, thank you.
Thanks. Well then, take a look. We are back at the high point of the day, 24,595. That's where we are at, 599. That's the swing high for today. But we are looking to reclaim that 24,600 mark. Let's hope we manage to reclaim the 24,700 mark as well. That was yesterday's swing high. So that would be a good sign, and if we can sustain these higher levels, nothing like it. And what one would be hoping for is a good close by the end of the day. But right now things are looking pretty good. 0.5% uptick on the index, almost 1%. A kind of an up move on the Nifty mid cap index, 2:1, that's advanced decline ratio. And some of the names like Apollo Hospital looking extremely buoyant, up 6% on the back of good numbers. New age companies and stocks are looking extremely good today, the likes of Nykaa, Hunasa, Paytm, etc. Some of the metal names are doing well on the back of easing of the dollar index as well. And you have some auto names, some energy names like ONGC, some consumption names like Eternal, Trent, etc. doing well. So let's hope that we keep the momentum going and end the day on a positive note as well. But with that, we've completely run out of time today. But of course, I'll see you back at 3:30 p.m. with closing bell. Don't forget to tune in then. But till then, have a good day and stay tuned to Money Control for all your other news and updates, and have a great trading day as well. From me and the entire team, thanks a lot for watching.